Okay, we're live. Hey, thank you so much for joining me. My name is Mitch Goldberg. You're watching my live stream. It's your post-market show. Be the boss of your money. I love that name. It's all about helping you take control of your money. We talk about the stock market, investing, borrowing, and a big topic, the housing market, and especially interest rates, which have soared lately to above 6%, something like a 12-year high in mortgage rates. And a lot of people are confused and confounded by how quickly mortgage rates jumped up. Keep in mind, mortgage rates are a function of the overall bond market, but we're going to talk about this in a moment. Just before we get into it, I want to let you know I have a special guest today, Robert Tolan, mortgage professional. He has been doing this for many, many years. This is the guy I like to talk to about mortgages, what's happening in the market, the housing market. We're going to bring him on in a second, but first thing I want to do is just do a quick rundown of what happened today in the market by getting all my stuff up here. So if you haven't heard by now, the Federal Reserve met today. They raised interest rates by an expected 75 basis points. That's 0.75%. The rate that they raised was the federal funds rate. It's a short-term rate. And you should start to see rates on CDs, maybe even money markets, savings accounts start to go up a little bit. It could take a few days to work its way through. But more importantly, we have a lot of inflation, and it's just been absolutely pounding the stock market. Worries about a rise in rates. And we've had a substantial rise in rates just over the last week, especially in long-term rates. So let's just take a look at how the market did today, because I think the reaction was right along expectations. Fed raised rates 75 basis points. It gave investors the confidence that the Fed is actually going to tame inflation. How long it takes is another story, another day, but at least the Fed's doing something. They're taking it seriously. The Fed hasn't raised interest rates this much in one meeting in a day since 1994. So the market found it soothing that the Fed is taking inflation more seriously, that they want to get ahead of the curve. They're so far behind the curve, it's going to take a lot more than this to get ahead of the curve. However, I look at today more like a relief rally. Just stocks were sold down. The Dow was down thousands of points in the last couple of days. So finally, we saw a little bit of a relief rally. It wasn't really much of a rally, a couple hundred points on the Dow. But I want to show you this real quick. Just let's take a look at how the day worked out. Economically sensitive stocks did well today. Consumer discretionary, real estate, communications, technology, financials, and then we start to get into healthcare, industrials, consumer staples were barely up. Materials should have been up a little bit more, I thought, but energy was down today. So we kind of had a little bit of a flip in terms of what was working compared to today from the last couple of weeks. But again, it hasn't really changed much, in my opinion. The mortgage rate continues to hover, hit a 52-week high today and over a decade high, 6.22%. I think it went out yesterday at 6.28%. So mortgage rates are still about 6.25%. And then we have this. Mortgage demand is now roughly half of what it was a year ago as interest rates move even higher. Actually, mortgage demand is less than half, not more than half a year ago. And refis have obviously plunged because there's nobody left to refinance rates at a lower rate, especially now with prevailing rates over 6%. So what we're going to do is this. I'm going to run a quick intro, all right? And then we're going to bring in Robert Tolan, and we're going to have a good show. So stick around. If you have any questions about what we're talking about, mortgage rates, borrowing, down payments, credit, this guy knows everything you could possibly ask about the mortgage industry, about what you need to do to get the best deal for yourself. So hit us up in the comments. We will answer your questions. While you're watching, give us a like, maybe a thumbs up, a heart, whatever the reaction is, depending on which social media platform you're watching on. We stream to Twitter, Facebook, YouTube, and LinkedIn. So here's the intro. Stick around. It's going to be a really good show. All right, Robert, thank you so much for joining us today. Really appreciate it. How are you doing?
I'm doing great. Thank you for having me, Mitch.
You're
It's a
very welcome.
pleasure to be here.
You're very welcome. So I'm going to just cut to the chase. What the hell's going on with the mortgage market?
It's incredible, right?
It's incredible. I've never seen anything like this.
I never fathomed, around the end of the year, we were sitting at around, touch over 3%, or quote all last year under 3%. And here we are. In fact, I just closed a loan at the end of May. It was a 60-day lock, but I was at 4.75%, and we're less than a month away. And I think you said we were hitting 6 3/8 yesterday, and earlier today, and I think we closed right around 6 1/8 is where the prevailing rate is right now for a 30-year fixed. Depending on the lender, 6 1/4. So it's and to put that in the dollars and cents, right? And this is what you got to think about it: is forget about the rate, you got to look at the payment. And been in the business almost 22 years, and aside from all-time rates being at lows, we always spoke that language, right? You're not writing an interest rate on your check to the mortgage company. It's a payment. But let's talk about that payment. A $500,000 loan, which is typical today in where we live in Long Island, $500,000 loan. In fact, they raised conforming limits like 670 at the end of the year for the to help with the high values that's been going on. But that 500,000 at 3% was like a $2,100 payment. That payment today at 6% is nearly $3,000. So you're talking about a $900 increase in a matter of 6 months.
So you're talking $11,000 more
net,
a year.
Net, and that's net, right? So think about how much you got to make to get that 11. It's like it's like 20,000. So it's crazy. But listen, people are going to buy homes still, right? We have life events. People buy homes, they get married, they have children. Unfortunately, people get divorced, people retire, they relocate. There's all sorts of reasons why people decide to sell and buy. But
people are always there's always people in motion.
Yeah, but applications certainly are down. You're not going to have the lines around at open houses that we had during COVID. It's just it's a different environment. And as a mortgage professional and anyone that's working within real estate, you have to embrace it, and you gotta change gears a little bit, and you got to figure it out. If you were all purchase business, all your realtors are going to get a lot less busy. So it's going to be tough out there in the mortgage industry.
Is it fair to say that we could expect a shakeout? When there's a lot of money to be made in an industry, an awful lot of people rushed into the mortgage business. There seems to be a lot of, it's like financial advisors, 15 years ago. We were all over the place. We had the shakeout, the Great Recession. Is that going to happen in your business?
Absolutely. Yeah. You're going to see big downs. It's already started. It just, hasn't hit the news yet. Most banks have considerably, downsized. We've been preparing for this though. We really have as a company. We're still hiring good people. They're out. We're bringing in employees. I think we onboarded, I'm not even kidding, Mitch, 100 people last month in the month of May, Nationwide Mortgage, on board around the country. Different branches, different loan officers. So we're doing things right. We're consultative with our clients, and the refi game's over. The days during COVID, a lot of us. Listen, I was spoiled too. I couldn't go out and see clients, especially you're a
very social person. I'm pretty heavily networked, and you are one of the people who is really out there, and you're a great networker too. You're a nice guy and all that, but I see what you mean. Listen, we were all cooped up for a long time.
But my business, everyone thought my business was going to die because they know me as the reverse mortgage guy by reputation and getting together.
Don't steal my thunder. We're going to get into that. We're going to get into the reverse mortgages. My point is,
okay, not yet. For the last 2 years or so during COVID, I didn't have the ability to do that. But I had low-hanging fruit, like you said, knowing lots of people and being in the business a long time. It was easy money. And a lot of people got into the industry, whether it be a realtor or a mortgage professional. People buying and selling, and everybody you knew was refinancing. If you had
listen, Redfin just announced big layoffs, and their stock is I think it's like a low price stock. It's under 10. Compass is announcing layoffs, and I think their stock, if I recall correctly, was like under 5. Zillow stock has gotten crushed as well, but Redfin and Compass yesterday announced some pretty big layoffs. So, it just seems an awful lot of people became realtors in the last couple of years. And you know how few realtors actually can even sell 10 houses in a year. And now with the low inventory, it's going to really, I think we see a major shakeout in the whole commercial, I'm sorry, the whole residential real estate industry.
I agree. And I think whether you're a seasoned professional of 20 years, I think you still got to figure it out and put some more, more arrows, right, in your quiver, kind of thing. You got to,
more different products, adjustable rate products. Now if you, my thing is, like, if somebody wants to apply for a mortgage and they get approved, pre-approval, a dollar amount that they can spend, an overall, what is it, like 30% of their overall income they can spend.
Well,
What's the ratio?
Sure. The banks have gotten more flexible with the debt to income ratios. We're really at like a 45 today. Back end is where, for conforming business, Fannie Mae, Freddie Mac, the big government sponsored agencies, we can deliver those loans all day long. As long as we have good credit naturally, and we've got some reserves, some compensating factors. But we can deliver that at 45%. FHA goes even higher to 50. It's not my wheelhouse, but yeah, the conforming business is 45. But like you said, the interest rate spike is it's a big difference, because that person that was at 45 is no longer at 45, right?
Right. Now it could be like 60. Do you actually have to say to people, that pre-approval we gave you?
I came close. I locked probably one of my last purchases in a few weeks. He's been with me since the end of the year. Couldn't find a home, right? One of those guys getting outbid, only putting down 5%. Not a very desirable buyer for a seller during COVID, right? If you had 5% down, sellers didn't want to talk to you. Today, maybe it's a different story. So finally got an accepted offer. We started talking in the 3% range. We actually went to contract, and the seller backed out. It's a long story. We were locked at 3,875. I locked Monday morning in this carnage at 10:30. The first time I can lock, we were at 5,875. And I thought we hit a home run. He's like 5,875.
He must have cried. He must have just vomited all over himself. That is so disappointing. That makes such a difference in your life, because when I got my first mortgage, we got 8%, and that was like the best deal ever. We couldn't believe it. It was like 1995, 8%. I know there's somebody watching right now who's like, I got 14%, even before that. And it's true. The rates have been steadily coming down for like the last, 35, 40 years. But man, oh man, first of all, when I bought my houses were way, way cheaper than they are now. I mean, I bought my first house for $275,000. And I remember doing this with my collar. I was dripping sweat when I was signing the mortgage and everything. We were at the closing, but I'd give anything to buy that house for $275,000 today. But maybe I shouldn't wish.
75,000, right? The dollar's not as strong, but it was worth 275.
Yeah. Well, anyway, but I just can't believe what a first time home buyer is going through.
These are the rates where I started. I entered the business right after 9/11 is when I entered the mortgage business, and it was a lot of carnage. It was it was a horrible time for our country. But then rates started coming down right after 9/11 from probably right this range. We had a blip up in 18 after the financial crisis. And now we're back there, right? The prime rate, actually, I think with the raise today, we're right back to those 2018 levels on prime rates. So it's
it's certainly taking apart a lot of overpriced stocks. You see the carnage in the stock market, but the housing market's different. The thing about Wall Street is, Wall Street is great at printing more stock in an up market. A bull market, SPACs come out, IPOs come out, secondaries come out, just all kinds of stuff is just regurgitated into the market when there's so much money going around. I'm not saying it's good. I actually think it's bad. But houses, you can't just build stuff. So what carries more weight with you? The fact that mortgage rates are much higher, making the cost of owning a home much higher, or is it the low inventories will continue to bring buyers in? Which one is more important?
I think inventory, because we're not seeing a pullback in prices yet. And that's because there's a lack of inventory. Once those new builds get up and ready, I think there was like 1 million needed homes in our country. So some sort of statistic out there. And we need those starts to get completed. We need more homes. And it's tough here, as you know, in the tri-state area. There's
no land.
You don't have the new construction like we have going on in other states.
Okay, well, we've got a few people out there checking us out today. Really appreciate it. We have Garrett is out there, and Sue is out there, and a couple of comments. Look who says hello.
Rhonda Cooper. Hey, Rhonda.
Hey, Rhonda. Nice to see you. And
Rhonda is very well versed when it comes to those Medicare supplements. Give her a plug. She really helps out.
I already said to her. I saw her at our last Financial Planning Association meeting. Said we're going to do something because she's the expert with United Health and Medicare Advantage. So
she's a wealth of information,
wealth of knowledge, and a very nice person. Josh, my friend Josh asks, do times like these make buying points worthwhile?
Buying
Good
homes, just buying a home makes.
When you buy a home, you get a mortgage, and they say, "Here's your rate," but you could buy a point for X amount of money.
So you got to look at the payment difference, right? So paying a discount point, 1% of the loan amount. So if it's a $500,000 loan, you're going to pay $5,000 for that point, right? So you got to do the math. How much are you saving on a monthly basis? Is it $50 a month, $60 a month? And how long does it take you? So if it's $60 a month times 12, 720, and then you divide it by the 5,000, you'll figure out the time frame. Is it 7 years? Is it 5 years? If you only have, this is a starter home for you, right? If I'm buying a home, I'm 25, 28, 30 years old, whatever it may be, your first house, it may not be your long-term home. Maybe I'm going to be here 5-7 years. That's when you may look at adjustable rates, right? That's when also you may decide not to buy down the rate because the break point might be 5 years. So you got to look at the math, and it does fluctuate. During the whole, I can tell you during the COVID time, that was a big question and the refi game. It was about 5 years. It was almost always like 66 months, 5 years or 5.5 years was kind of the break point where, okay, then it makes sense. And people always like the lower rate. So they don't want, sometimes they like to pay the point. They like to tell their buddies that they're a 2.5 versus 3 or whatever the case may be. I don't know, but you got to do the math.
I would think that people who have, even for a starter home, if you got 2.5, 3.5% on your mortgage, you might decide I'm just going to stay in my house and never move, because to sell your house and go to another house, which costs more money, a bigger mortgage, and pay 6.5%. I mean, that's huge. I know a bunch of people who
you hit it on the head, because a lot of people are upsizing in this market, right? Your house is at an all-time high, rates are at an all-time low. Perfect time to sell your house. And if you feel like you've got good money, good income, and a good job going forward, you're going to upsize. I know quite a few people that did that. They went from $600,000 homes to $800,000 homes, or $800,000 homes to over $1 million homes. That market we're going to see be gone, because you're right. No one's going to give away that 3% mortgage. That motivation to go upsize is going to be gone. So
that's okay. If there's any background noise or whatever, that's okay, because this is authenticity. We're just regular guys doing this. And
I bet half just walked in from a long day of working at school.
It's okay. So. You got a child in the background, the dog barking. It's, I worked from home for a year and a half and did this live stream every day with all cooped up in a house during COVID. And it's like, whatever, it's with a dog in the background and whatever. This is just us real. This isn't cable TV. It's just, it's just us.
I got to quiet them down a little bit.
Okay.
Hey, Hev, I'm on a live stream.
All right.
Thank you.
So one of the things that you are on a mission to do is this, and I think it's a great topic. I think it's an important topic, not just a great topic. Reverse mortgages have a pretty bad rap, and the marketing and the reputation, and it was like a very seedy part of the mortgage industry. I see it changing. I'm not trying to put in a shill or whatever, a plug for reverse mortgages, but I do see in some circumstances that it could be a big part of a retirement plan, a way to age in place. And you've been on a mission for a long time to legitimize the concept of a reverse mortgage. So what's the deal with those? Tell me a little bit about them and what makes them a good tool, and why do they have a bad rep, and have they gotten better? You go ahead.
All right. So with regards to the bad rap part, I think part of that, and I actually got reminded of it recently. I sat down with a couple in Glendale, Queens, right? And every profile of a client is different. And this client is down to they have like six to 8 weeks left of money, and they, free and clear home, but they have daughter has ailing parents, and she's got around the clock care. And I said, why did you wait so long to start this process? Because these loans take 6 weeks, 8 weeks to close. We don't move that quickly with seniors like we do with 30-day closes on refis, and so she said, I called the numbers on TV, and I got a bad feeling. And the reality is, unfortunately, a lot of the advertisements that are out there, you call the customer of the club, the homeowners are calling into a call center. And you know how that goes. You're not dealing with a professional. So first thing is, you got to find out from a trusted advisor, not your next door neighbor who heard about a reverse mortgage. When I say a trusted advisor, you can go online. You can go to NRMLA, NRMLA, the National Reverse Mortgage Association. That's the governing body for reverse mortgages. That's the one who's in DC for our industry. That's a great place to search for a certified reverse mortgage professional. I think the latest stat I heard was 250,000 loan offices across the country. Most of those loan offices, if they're lucky, maybe do one reverse mortgage a year, maybe none, maybe one every 3 or 4 years. They're not they don't want to do them, or they'll ask someone else to do them. That's what I've been doing. That's my niche, my specialty. But right now, certified, there's like less than 200 in the country. So you have each state probably has 10 to 12 to 15 roughly or less. But that's where you're going to have someone that has closed, at least 50 loans is the criteria. They've sat in for an exam that you can't study for. It's really a real life experience kind of designation. And that person is going to have the character, the ethics, and communication skills to walk you and any other decision makers involved in the process through that loan, showing you the good as well as the not so good.
You're working with seniors who are, I think for good reason, a protected part of the population.
Absolutely.
Okay. There's a lot of disclosure. And, fact is, there have been a lot of people who've been ripped off or bamboozled or didn't really understand what they were doing, which is why the reverse mortgage sector slice has a bad rep. But I don't think of you that way. I know you are a great guy.
I'll give you another.
You've been talking to me about professionalizing the reverse mortgage space.
Sure.
For decades. I think I met you like 15 years ago. You've always talked about reverse mortgages as a retirement tool or as,
it depends upon the lien situation, right? So if you own a home and you're a senior and you're fortunate not to have a mortgage on that house, which most of our greatest generation is in that position where they have either no lien against the house or maybe a very small lien, that person should be looking at the line of credit option, not necessarily the fixed rate. And that's where, seniors get confused. They're told their whole life, fixed rate, fixed rate, fixed rate. That could be the truth with the program if there's not going to be much left over after paying off any liens and there's no line of credit available to age in place, then maybe the fixed rate is the appropriate, product. Or in a crazy market like right now, you may not have a choice. The fixed rate may yield more money that you need to do the loan or accomplish your goals. But in a normalized market, the market that I've been working in since 2007 with reverse mortgages, I've been in the business since 2001, but 2007 is really where I started specializing in the product. The line of credit for people that don't have a big lien is the way to go. They just got to be educated on how to use that line of credit, where maybe even make payments towards it.
That is a big thing, to educate people. People do this. You make the transaction, they get the money for the reverse mortgage or the line of credit, and you can't sit there and give them a college level education for the next 3 months on it. People actually have to have their own knowledge of personal finance, because no matter what you give to people, it's not going to help them. Look, there are people who win millions of dollars in a lottery and they blow all the money because they still have no personal finance knowledge. If you have no personal finance knowledge, you could give anybody any amount of money and they'll just rack up a ton of debt.
Right. Yeah.
Kind of like the U.S. government, but we don't want to get into that right now.
Right. And actually, the product has changed over time drastically, with all different steps in place to protect seniors from themselves. In that instance.
There's all kinds of regulations. I know in the state of New York.
I remember a situation where a person was shopping for a loan, and there was someone that came out from the client's house right before me. I saw them leave, and I walked in, and I was working at Wells Fargo at the time, and I don't remember where they were from, and I was there with my line of credit presentation. There was no lien against the house. Let's find out how much they need. And I had an illustration showing them maybe borrowing $1,000 or $2,000 a month from their home. And the other person said, she asked me, well, what about the fixed rate? This guy was showing me a fixed rate. I'm like, a fixed rate? That means you got to take out $350,000 out of the house in one shot. You're going to be charged interest on all that money. What are you doing with the $350,000? Oh, well, he had somebody else come in that was waiting in the car. When I asked that question, he came in and he started telling me about different investments I can make with the money. So those are the red flags.
Of
so
course,
those are the red flags that go on.
It's that is no, that you don't do that. Is just see that is pathetic, and that's a knock on my space of the financial services industry as well.
My point
An
is,
insurance guy or somebody say you should take out a big thing, and then we'll sell you with all that money. We're going to sell you a special product that's going to do this, and that, but they're really just taking your home equity money and turning it into their commission money, and then the client 3 years later is like, I have nothing, or it's not what I expected.
What happened though is, so seniors, right? If you're a senior and I give you two options, Mitch, right? This reverse mortgage product, there's a fixed rate and there's an adjustable rate. Which one do you want?
People will usually say fixed rate.
9.9. They say, unless they've done their homework and they're knowledgeable about the product. They're going to say fixed. It makes the job of the loan officer, who's not well educated on reverse mortgages, he removes all that stuff where he even has to talk about it. All right, it's a fixed rate. It's simple. I have to go into how the loan adjusts and the line of credit and how the line of credit will grow to help you age in place, to give you more money. They don't have to go into any of that. They say, all right, fixed rate done. It's a calculation, and boom, you're taking all the money at close. And that's not the right product. That wasn't the right product for a vast majority of people that took out these loans. And then you combine what we had in the financial crisis. So around the country, if you did this loan in Florida in 2008, 2009, and back then they used to give you more money on the calculation. You bought a house for $300,000. You refinanced the house for $300,000. They gave you 70%. They gave you $210,000. Whether you had to pay off a loan or you took it as cash, right? We know what happened to that home in Florida that was valued at $300,000. It went to $150,000. So I remember when I started in reverse mortgages, Mitch, the default rate, meaning default, you don't have to make a payment. What are you defaulting on? Well, you still have to pay your property taxes and your insurances. And that kind of got lost by the wayside, 10 years ago, that gave the program a bad rap as well. But, you went underwater pretty quickly. And, seniors talk, they go to breakfast, and one senior tells the other seniors, like, you have that reverse mortgage. You have no equity, right? You're upside down. Don't pay your taxes and insurances. The bank will pay them for you. What are you talking about? Yeah, the bank's got to protect their lien interest. They're not going to foreclose on you. And this was kind of true during the foreclosure, that whole, financial crisis. The banks were being hated on. The last thing they were going to do is foreclose on a senior with a reverse mortgage. So they did. They were paying the taxes and the insurances for people that decided they didn't want to pay them any longer because they had no equity, and they learned that the bank would pay them for them. And it wasn't until the government went to the banks, the big ones, and I'm not going to name names, but we know who they were that were involved in the product, and says, hey, the contract says if the client is not paying the tax and insurances, you need to foreclose. So they all disappeared. You didn't see any big names, and they didn't want the reputational risk with having to, foreclose on a senior. And they, the banks
also it gave them time to let the housing market recover, so they maybe
the bank, you got the government insurance in the product, Mitch. So the bank is being made whole when the loan comes due. The banks are getting their money back plus the interest, everything they outlaid. They're getting it all back because it's government insured. There's no default. The government guarantees the loan. So that went on for a while until they corrected that, and then banks were forced to foreclose. And but no one knows. They only see the news that the big bad bank foreclosed on someone. They don't know that they maybe didn't pay their taxes for the last 3 years. So it's like any it's education.
It's a lot. I don't know how you educate the masses, but good luck doing that. So I want to do something real quick, and thank you for talking about reverse mortgage. Oh, what I want to ask you is, how does higher rates affect reverse mortgages? Does that mean you get less money?
It does.
When you take the money out of your house?
It does. In fact, before this call, I had a client call me from a referral. Says, hey, I did a quick calculation. I'm like, I'm sorry. I'm like, 6-7 months ago, we probably would have been able to take care of your mortgage, but you would have qualified for close to 50% of your appraised value. But today, at age 62, 63, which is the early, it's when you first start qualifying.
Kind of young now.
Kind of young. Believe it or not, she's 35% is what she's. It's like a 15% haircut with that 10-year Treasury going from 2% to 3.5%. Has cut the a good 15% of loan to value, or what they call principal limit in my world, but it's loan to value. So it's 15% less that a senior can get now against their appraised value because of what's gone on with rates over the last 6 months.
That's a huge difference. So now I want to do something a little different. You're like, oh, what's this guy talking? Look, we've been on for 30 minutes. I told you, it goes by really fast.
I didn't even get a chance to put my plug into how to buy a new home with a reverse mortgage.
Oh, we'll have to do that another time. But hold on. I want to do something. Here we go.
It's lightning round.
It's lightning round. What gave it away? Okay. Favorite baseball team?
New York
Mets. Yankees?
Yeah, my brothers will tell you that I'm a front runner because I did root for the Mets in '86 when I was a kid. But I'm a Yankee fan.
All right. Lowest score of golf. Lowest round.
79.
Wow.
That was at a public golf course, and I haven't broke 80 since, and I very rarely break 90. So let's put that into perspective.
Okay. Favorite breakfast.
This is going to be one that you've probably never heard of before. So I have a little contraption that I make myself a nice egg white kind of boiled omelet, I guess. Yeah, and then I throw it on a nice pumpernickel scooped out toasted bagel, onions, mushroom, and a little pesto on it.
You have to send me that recipe. I just like you need to make a video of yourself making that. I think that would be really good.
That would be interesting.
Social media. What else should I ask you?
You'd ask me about my 2 great kids and my great wife.
2 great kids and great wife. How are they? Tell me about them.
You work from home, right?
Yeah, absolutely. Good for you.
I was married 15 years, June 2nd. I've got a beautiful,
congratulations,
13 going on 14 daughter, and one that just turned 9. And we celebrated her dance performance last night at elementary school.
Wow, life is wonderful. I'm so happy for you. All right, buddy. So listen, thanks so much. I guess we'll both get going. You are a wealth of knowledge. I think I could have talked to you for a couple of hours just about this stuff. We'll do it again. Okay. Let's
do it again. Let's talk about reverse for purchase. That's what realtors need to know about.
Reverse for purchase. That's what we'll do next.
All your realtor friends out there that are scrambling around, they gotta. That's
well, listen. How come you're not making social media about this? How come you're not making? Why don't you get on the video and say, "Hey, I want to tell you what we're doing."
I need you.
I have to help you with that.
I need to help you get set up. Today was a test.
I'll help you get set up with that. You take care, and thanks again. All right, guys, thanks so much for watching. If you have any more questions about this or something you may have thought of after you watch this, hit us up in the comments. We will both be sure to see your question. And until next time, see you tomorrow. Thanks.